Mr. Prashant. So stick around till the end because there are going to be some interesting points that are definitely going to come up that you would be able to make use of. I hope you're doing well, Prashant sir.
I am doing excellent, and yeah, before you thanking me, I wanted to thank you for your invite. You guys are doing some incredible work, and a big fan of what you guys are doing. Keep up. I am still a learner when it comes to social media, so I kind of look forward to take inspiration. So as you have questions for me, I have questions for you, and we all learn from each other. So I am also really looking forward to this session. And once again, thank you so much for having me.
Definitely, sir. And I really like. I came across your Instagram page, and I fell in love with it because of the way you were just putting out information, and also it's because the finance sector of it on social media has become so crowded right now, and there are so many financial gurus that have just come up. But it's just really great to see someone who has so much experience sharing knowledge with the young generation. So, sir, we are ready to go and to formally start off and to introduce Prashant sir. For the audience, Prashant sir has an overall experience of 25 years in the financial sector. He's the senior director at Everstone Capital, and he's also worked with Rajesh Jhunjhunwala as a senior researcher. And of course, he himself is an investor. He himself has invested in many startups as well. So welcome, Prashant sir. Thank you so much for joining me for this session. There are a lot of questions that I have for you, which I'll get to. But sir, please, if I have missed out anything or if I haven't done justice to your introduction, please do tell the audience about yourself.
No, two additions I will tell. There were three additions. One, the first addition being I am a chartered accountant, and I actually became a chartered accountant to get into stock markets. Second thing I want to kind of tell all your audiences, whatever I am is because of the number of mistakes I have made. I was sharing in one of the other lives that I've gone bankrupt twice, and both the times I went bankrupt trying to trade. You would hear in my Insta accounts, I continue to recommend to people not to trade. And third thing here, as you can see behind me, I want people to read a lot because I believe if knowledge is power, reading is your superpower. One of the purpose of my life is to make people fall in love with reading again. I'm also a trained speed reader. And therefore, these are 2-3 things that I wanted to drop in, known from an introduction because all of the guys over here are friends and I just wanted them to know these 2-3 things about me.
Definitely, sir. Actually, I forgot to mention about the speedrunner part of it because that is something that is really interesting to me, and I would love to understand a little more on that. But we will definitely get to that at a later aspect itself. But sir, to start off with our main segment right now, which is to talk about the startups and the stock market itself, right? So first, to cover the stock market aspect of it, one main question that I think I have, and a lot of maybe amateur investors, I don't know if professional investors already have that answer, but as an amateur investor, why during the first wave we saw that the market fell, right? We had the market crash all over the world. But then in India during the second wave, we saw that even though the economical condition of the country was at a low point, the market was still doing well, and it's been touching new heights since then. So what is the reason for that? Is there any particular reason, or is it just the way market works?
A bit of both. Their markets cannot rise, Rohit, without a reason. Also, you have to understand market always moves in cycle, and bull markets normally start at the heights of pessimism. So what was the pessimism that the market had? So even before something like an COVID happened, you have to see where the market was coming from. One, it was coming from the fact that the country has not lived up to its reputation when it comes to growth, the GDP growth of the country. Plus, to kickstart GDP growth, you require a certain amount of endeavors from the government. The leadership, starts from the top and comes down. And people were struggling to figure out, where will the new set of growth come from. Banks did not have money because of all the bad bank problems that we were facing. So we were already facing a big challenge, and then COVID suddenly hit us. Now, if you look at COVID, when COVID hit us, none of us knew how to react to it, right? When I say none of us, I'm saying none of the markets all over the world knew. It was a catastrophe, and like any event, something like this when happens, you immediately have a much kind of coming lockdowns, economic activity comes down. Suddenly you end up kind of figuring out what's wrong, and the first intuition of people is to move into safe zone. The moment you want
Right.
to move into safe zone, what technically happens is you will start liquidating your assets. You will move
Right.
from a fixed asset into a liquid kind of a form.
Okay.
Something like that happened, which led to the market kind of, first beginning to correct and then gradually one correction leading to other, more people wanting to sell, more supply and demand falling. But at some point of time, market had to make the bottom. When the market made a bottom, market made its trajectory little up. But I will tell you what were the 2, 3 large triggers for the market to have a kind of a V-shaped recovery. One, when you have a problem, everybody looks at how are you going to deal with the problem, right? So what did banks do all over the world? All over the world, the banks started printing more money.
Right.
By printing more money, they wanted to give a lot more liquidity into the hands of people to spend money so that they consume more. If you consume more, as a result of this, the economy has a chance of coming back. So there was surplus
Right.
liquidity in the market. A part of that liquidity also came into countries like India or emerging markets, as they kind of call it. So that was the first trigger. Something very interesting happened. This happened largely and only in India, maybe partially in US, but largely in India. Suddenly, when you and I were at home, a lot of people did not have jobs. Markets were beginning to look up. A lot of retail investors joined the bandwagon. And when they joined the bandwagon, they also brought with them certain amount of surplus liquidity. So you had global liquidity, you had domestic liquidity. That was the second reason. One reason, you have to understand how the stock market functions. Stock market is a beast, always likes to discount the future. It's a future discounting machine. It has a certain relevance to the past, but not a lot. Maybe 20, 30% relevance to the past, but largely it looks at what's going to happen in the future. And when you look at when the stock market started looking at the future, the Indian budget was a remarkable budget in my view that kind of changed the course of the markets, I think, for the next 5, 10 years to come. So what was this
Okay.
budget all about, right? When I mentioned to you, we said that we were coming off a low GDP growth. Government के पास पैसा नहीं था. On top of that, you had to give some kind of a stimulus. The government had two things they could have done. The first thing is, when your back is against the wall, you give up. And sometimes they say that, necessity is the mother of all invention. And here I will give credit to the government. They suddenly realized that India is back against the wall. So rather than playing on the offensive, on the defensive, I will come and play on the front foot. So what was this budget very shortly? In this budget, for the first time, the government said, we will chase growth.
Okay.
We will chase growth. Earlier, every government wanted to chase growth, but the problem with chasing growth was I did not have money. So the government said, okay, to chase growth, if I need money, I will sell my assets. I will sell shares in LIC, I will sell shares in GIC, I will privatize the assets. Agar kam padega, then I will start selling land. Or kam padega, then I will start printing money or borrowing money. But one thing I will not compromise is on growth. The second thing that they did was they kept interest rates very low. And interest rates and stock market have an inversely proportional relationship. The lower the interest rate, the asset values go up, the stock prices go up. Look, as a
Right.
backdrop of all of these three things coming together, the market started moving up. And after that,
Okay.
as things began to open up, today also, if you honestly ask me, the economic condition of our country is nothing great. But the expectation that we will do better is much higher. And stock market works on this expectation. So I guess as a result of all of this, and believe me, it is not that I was wise enough to buy when the markets were low. I was also still. It's not that none of us caught the market at its bottom. Very few.
Right.
We all participated once we kind of saw the trajectory of the market. So everybody had a left out feeling, and when you have a left out feeling, then when you come back with a slightly stronger bang.
Right. Makes sense. Makes sense. And that's the FOMO that you're talking about, and you brought up a very good point, which is about so many more people become joining the market over the last year itself, because of people staying at home. Everyone was bored. They started learning about the market. I'm also one of them, right? Because I also sort of got deeper into the market segment of it, and I started doing more research and learning more on it. So now when we talk about the stock market itself, we've learned that, okay, the government's actions really boosted that part of it. The pandemic also sort of pushed people towards putting in more money. More money means higher the prices, right? But now my question is that even right now we are still seeing, I mean, for the past 2 3 days, I think the market has been falling. But then on a more general note, we have been seeing that it has been at a bull run itself, right? Is
Absolutely.
there a particular reason, or again, is it just the liquidity part of it itself?
So one is liquidity. Second, Indian markets are rising for two reasons. One, as I said, there is a very strong corporate political leadership that's given a very strong message uh,
Hmm.
to all of the country that India is
Hmm.
going to pursue growth at all costs. Earlier, क्या
Okay.
होता था, whenever government would have little money, they would give it to the poor because they want
Hmm.
to come back to
Hmm.
the power. This time, the government said, "I will give it to the poor, but I will do socialism through capitalism." Which means
Huh.
I will ensure that people invest. They've created that bedrock. Now that's what they have done. But what they have done, the companies also need to then invest, spend on
Hmm.
capital expenditure, grow. Now, if you look at the corporate balance sheet in India, the
Hmm.
corporate balance sheet in India is at its all-time low when it comes to debt or leverage. You know, when
Right.
I was growing up and I would meet promoters or companies, and I would ask them, give us a brief about your company or, tell me who you are. They would
Hmm.
begin with, our company is a 700 crore company. Now, when they said 700 crore company, it was revenue. Today, they don't talk revenue, they talk market cap. Now,
Yeah.
the entire corporate world, when you are low on leverage, that much more appetite you have to grow. So what
Hmm.
happened is political willpower was there. Corporates were under leverage. So corporates are saying, okay, let's grow. The third thing that is helping India grow is the fact that there is massive US-China tension. So the
Hmm.
whole
Hmm.
world is looking at a China plus world. So if you look at the China plus world, where I want to have multiple suppliers outside of China, so far a lot of that growth went to Bangladesh, it went to Malaysia, it went to. But now the elephant has woken up. The government has created the backdrop. And now the country feels that I don't just want to service the domestic demand, but I also want to go and market to the world. So the whole
Right.
processes have changed. My view is uh,
Hmm.
I
Hmm.
will see corporate profits growing between 15 and 20% every year for the next 5 to 10 years. And if you then apply the power of compounding to this, you have
Hmm.
no idea how big the balance sheets of companies are going to become as a result of
Hmm.
this. You always have to remember, stock market ultimately is a slaves of earnings,
Yeah.
and it's a future discounting mechanism. So if
Hmm. Hmm.
stock
Hmm.
market thinks companies will make more profits tomorrow, they will start discounting it today. I give you a very interesting example. Today, just before the live, somebody sent me a research report that UBS has come out on Zomato.
Hmm.
Zomato has been valued at 165 rupees by UBS.
Hmm. Hmm.
Okay? Now, if you read the report, so today the whole market is looking at FY22 or FY23. UBS has now gone to 24, 25, and 26.
Okay.
But essentially, what are they doing? They are discounting the future. So the
Hmm. Hmm.
stronger your conviction is on the future, the stronger you are with respect to your optimism for the markets.
Right, right, right. Completely makes sense. And the whole market cap part of it is something that I want to come to later as well, which is with regards to startups. one of the main aspects of it, right? But before I go into that, I have another thing that I really want to understand. That now we spoke about how stock market is going up and why it is going up, right? And like you said, the government is using capitalism to sort of push the socialism aspect of it, which is again contributing to the market. But then, like you said, the real economic scenario is not really that great in India. So when we look at it from an overall perspective, right, like when we look at just the economy of a country, right, is the market disconnected from the real economy of the country?
No. Today I did a post where I shared lessons which I learned from Rakesh Bhaiya. And the first lesson what he taught us was Bhav Bhagwan. What do I mean by Bhav Bhagwan? At that price, whatever is that Nifty or Sensex, somebody is buying and somebody is selling. Okay? At the same price, somebody is bullish and somebody is bearish. Okay? Who is right? Only time will tell. So we all in stock markets work on probabilities. Today, if you look at what has happened since the COVID, the market has gone up by 100%, right? So on that day of COVID, when market hit all-time low, somebody was still selling, right? Because if nobody could have been able to buy. So those guys who sold were wrong. Only over a period of time we'll figure out whether they were really wrong or not. But currently, if you look at it, and if I look at into the world, it seems what has COVID done? If you look at, okay, it has caused a lot of challenges and hardships. But if you look at it from a stock market perspective, where only good companies go and list themselves, the larger companies go and list themselves. Because of COVID, the smaller guys are vanishing. At Burger King, where I work today, we are seeing a massive acceleration from unorganized roadside eating to QSR chains, organized sector. So everybody will, because of COVID, everybody's addressable market of the larger companies has grown. And if their revenues grow disproportionately, profits will grow disproportionately. That's first point. Second point, in COVID, each one of us, including us at Burger King, we have cut down massively on our cost. It's like, a friend of mine had a heart attack a couple of months back. He was 140 kgs.
Okay.
Heart attack aaya. Now his single most goal in life is to reduce weight. It's the same with companies. COVID hit, I did not know how much fat I had. But because COVID hit, I had no choice but to cut all the fat. So all companies are now very, very slim. They are very, very low in terms of cost. On top of them, their markets are rising. You hear what Jubilant's commentary was. Domino's is talking of unprecedented levels of growth. Why are people suddenly eating pizza or I said burgers? Because the options have come down. 35 to 40% restaurants have shut down. That's in our side. Look at steel as a business. Because of this whole climate change, environment, it's almost difficult for a new steel plant to now come up. Which means the existing guys will make a lot of money if there is demand. Now, suddenly, if you see one of the other trends during COVID, what happened? Because interest rates were low, we saw unprecedented real estate buying. So if you are a real estate developer, Rohit, and your inventory you've been able to manage to sell your inventory, which you are not being able to, now you are sitting on cash, you will now grow and build more inventory. If you now want to build more inventory, you need more steel. Steel prices have gone up. So if you see structurally, I am struggling to find sectors which will not do well.
Right. Okay.
And this does not happen very often. You need certain triggers for this to happen. When COVID happened, nobody knew this will be the trigger.
Yeah.
And now we are looking at this as a trigger. So from that perspective, one is hopeful that the probability that the market will not crash. And my definition of crash is the market falling by 30% or more. Probability of that is low.
Right. So, but like based on this, explanation, I feel like this is more at a macro level, but like if you look at it from like a more micro level, right? Say individual itself. India has a huge population of people that are living in tier 2, tier 3 cities, right? And villages and towns. Like I think 70% of the population live in the villages itself. But then, and I'm this is just an estimation that I'm making based on my understanding, which is majority of the investors that are on the market are people that have some education level, right? So that isn't this creating a disparity of income as well amongst the poor and the rich in the country? In the overall scenario, it might be same, but like the disparity between these two.
There is, and this disparity will increase. But imagine what is going to happen over the next 24 to 36 months. As companies expand, they will need labor. Today, the farm bill that the government is introducing is going to increase the MSP prices for commodities, for agri commodities. Farmers are going to get rich. The labor, the person who's working at your home today, his or her cost is going to go up. Because you will need them more. If you don't give them job, they will go and work somewhere else. So there is always a lag. If the country grows, you will need more people to work. And if you have limited amount of people, the price will go up. Labor costs will go up. And which is the bigger theory that it's like a virtuous cycle, right? One thing leads to the other, leads to the third, leads to the fourth. When this whole spin kind of moves in tandem, that's where you get 10, 20 years of economic progress. That is what happened in China. In China, there was nobody to disturb that cycle because it's an autocracy. The fear in India is it can get disturbed because it's a democracy. I, for one, believe this farm bill is brilliant. But somebody has gone and stopped that, right? That's democracy. So we will always take longer time than China to catch up. But our catching up will be permanent, not like what's happening in China now. As the Chinese government saw certain companies becoming rich, now they are poking it. So, I'm saying you are right. But my sense is it's just a matter of time before this inequality or this. But one thing I will tell you, I still meet a lot of people who don't want to work. Especially in rural areas. Okay. If you don't want to work, then don't complain. Those guys will never make money. But there are people who are hardworking. There will be migration. There will be migration from rural to semi-urban, semi-urban to urban. And each of these migrations will be at significantly higher salary. Those who stay up in their villages and do farming, because of the higher MSPs, their incomes are going to go. And mind you, their incomes are tax-free. So, I when you look back and look at a slightly larger picture, I struggle to figure out if by and large something major does not happen, why will this country not grow, especially because of the budget focusing on growth?
Right, sir. Makes complete sense. Again, I don't want to dive into the farm laws because that's something that is very controversial and people have their own opinions as well. But what you're saying at a larger perspective completely makes sense. Right now, maybe the conditions are bad, but over time, what we are at right now will be the path for improvement itself. But now I want to take this conversation towards the startup aspect of it, right? Which is basically, again, bringing it in just from the Zomato, which has been in the news for the couple of months now because of its IPO. And similarly, Paytm is also coming out with its IPO. Byju's, I'm not sure. I think they are in conversation. I'm not sure about that. But then, like in terms of Zomato itself, although the company is not really making any profits, right? It is the revenue is also moderate based on its valuation, but then when you look at its valuation itself, it's very, very high, right? Which is again the reason that there are various reasons to it, which maybe you could give us an understanding of. But the major one that I understand is sort of the brand image itself, which is contributing to its valuation at a larger perspective. So, based on your understanding, what is the reason behind such hype behind these startups, and why are they valued so high?
So there is a fundamental reason, there is a technical reason. And for every technical reason and a fundamental reason, there is a reason against it as well. Okay. So first, let's look at the technical reason. The technical reason, a stock like Zomato kind of gets crazy value, or there is a frenzy for Zomato because there is scarcity value. You know, Harshad, I used to know Harshad Mehta well. And once Harshad Mehta told me a story about gold and water. Okay. Can you live your day without water?
No.
Okay. And how much do you pay for water?
Right now, I think like for a liter of bottle, 20 rupees.
No, at your house it is free, right?
Yeah, in a
You
house it's
cannot
free,
live
yes.
your life without water and yet water is free. Can you live your life without gold?
Yeah.
So you can live your life without gold, and gold is valued at what, 50,000 rupees. You cannot live without water, but water is free. Then it asked me, he said, Prashant, and he is a Gujarati, so in Gujarati he asked me, Prashant, tu pani no bhav sona no kari nakho. So will you be able to change the price of water to price of gold? So I was a young guy then, yeah. I said, nah, bhai, I don't know. He said, "Hum kari apu. I will do." He said, how? He said, take this water and go to a desert where people don't have water. They will give you more than the price of gold. Why? Because there is scarcity value. So that's Zomato. Technical part. There is scarcity value. There is nothing like Zomato that is there. Therefore, there are people who have a fancy for it, right? I once took a holiday to Greece. I am a vegetarian. And we were struggling to get good vegetarian food. But one place we got vegetarian food, and you should have seen the way we ate, as if we have not seen food in our life. Why? Scarcity value. Right? So there is a technical reason. The fundamental reason, if you look at it from people who are bullishist perspective. So when we invest, the first thing that we look at, and this is what we were taught by Rakesh Bhaiya, is how big is the opportunity. So when you look at opportunity, you look at the addressable opportunity. So how big do you think is the food delivery or the eat at home food opportunity? Do you know when did Zomato come into India?
2008 it started, right?
2017. They came into television. Swiggy Zomato.
Okay. Right.
So it's just been 4 years. So the at home food eating convenience is still a nascent market. In that nascent market, they have a 40% market share.
Okay.
So imagine if the nascent market were to grow by 10, 50, 10, 20, 30 times. The people who are bullish feel that Zomato can become disproportionately big. Okay? Which is why they are buying the stock. But why? Because ultimately, I told you, market is a slave of earnings. They will ultimately want to chase profits and cash flows. So today, Zomato is a loss-making company. But their view is if Zomato from a 2,200 crore revenue company becomes a 10,000 crore revenue company, then incremental 8,000 crore of revenue, 4,000 crores will be profits.
Okay.
Why? Because their costs are fixed.
Okay.
That's their view. I am not saying they are right or wrong. Okay? On the other end, people who don't believe, they are saying that ultimately I will give a valuation to the earnings. Let's say Zomato is today 1,10,000 crores. And if I want to give him 40 times its cash flow, which Hindustan Lever is also not getting, I still need Zomato to make 3,000 crores of cash profit.
Right.
Okay? ये तो कभी आएगा ही नहीं जिंदगी में. So when you listen to them, you get bearish. When you listen to people who have bought, why they bought, they have a strong argument as well. Only time will tell who is right or who is wrong. But one thing you have to understand for all the listeners, you always play a game when you trade off between risk and reward. You have to remember that's the game you are playing. The guys who are buying Zomato today are playing a game where the risks outweigh the rewards. Okay? And which is where I feel that when you invest in Zomato at 1,20,000 crore market cap, the risk reward doesn't seem to be in your favor. Because
Hmm.
it's like Virat Kohli hitting 5 centuries consecutively. One
Hmm.
bad shot and he gets out, the risk reward goes out of whack, the stock collapses. Because जब बेचना आते हैं ना, तब लाइन लगेगी सबकी बेचने की. So I'm not saying who is right or who is wrong, but to your question, every
Yeah.
business and any business should be valued on your expected future cash flows. And I will take one more minute.
Sure, sir.
I read this book on Jeff Bezos called Invent and Wander. These are
Hmm.
nothing but Jeff Bezos' letters to his shareholder from 1997 till 2020.
Okay.
Amazon started in 1994.
Hmm.
From 1994 till 2001, which is 7
Hmm.
years, like Zomato, Amazon lost $3 billion to acquire customers.
Okay.
The stock price had gone down to $6.
Hmm.
Today, Amazon is almost $3,800, right?
Wow. Okay.
But those who at that point of time thought Amazon is a great company, there was a newspaper article said Amazon dot bomb. Barron's, the magazine, wrote Amazon dot toast.
Hmm.
Everybody was written off. The way I am writing
Hmm.
of Zomato from an investing
Hmm.
perspective. If
Right.
after 10 years Zomato delivers, this 165 could be 1650, who knows?
Yeah.
But the question is, how strong is your conviction?
Yeah.
So ultimately, startups will get valued on expected cash flows.
Right, sir. But sir, now this brings me to another aspect of it, which is we spoke about a public company right now, right? A public startup company, which a startup which has just gone public. But then when we look at like startups which haven't gone public but are still valued at a very high level, right? And for example, Cred is one big example, right? Their revenue itself is very low, but then they are still have a very high value, and that comes in because of the investors itself who are putting in the major investment into it. Do you like is it the investors' fault for putting such high value to a company with such a low revenue, or is there really some sort of again, like you said, the future earning capacity is that high that it's being valued at that level?
So it's a function of what is the story that was pitched to
Hmm.
the investor, right? When
Right.
Kunal Shah of Cred say went to Tiger Global to raise money,
Hmm.
Kunal
Hmm.
told him his vision for the next 3-5 years, right?
Hmm. Hmm.
Tiger bought into that vision. Tiger Global, somebody who's now been investing in the tech for the last 15 years, I would want to
Hmm.
give Tiger enough credibility to have asked Kunal all the questions he wanted to ask to figure out whether he wants to invest or not. But
Hmm.
there
Hmm.
are companies go through phases, and in those phases, people value businesses differently. Let me tell you, in the initial phase, how was Facebook valued, right?
Hmm.
As
Hmm. Hmm.
Facebook was growing, uh, he needed more money to put up more servers.
Of
He
course. Hmm.
needed more money to go to more countries. Mind
Hmm.
you, Credito still has some revenue. For the first phase of Facebook's life, he had no clue how is he going to monetize. Correct. So how was Facebook valued in those days?
Hmm.
Facebook initially was valued at $100 per subscriber.
Hmm. Hmm.
So how did the number 100 come?
Hmm. Hmm.
The 100 number was that the day Facebook has about 500 million to a billion subscribers and it starts the
Hmm.
monetizing angle, the net present value of the future cash that they will earn per customer will be $100.
Right.
When Facebook started monetizing itself,
Hmm.
still it was not making money. So that time the market started using a metric called price to revenue.
Okay.
Then when they started making money, Market now gives it a multiple of cash flow.
Okay.
But your question is different. Your question is who is right? And that only time will tell. अभी तक तो
Right.
जिसको बोलते हैं मोटली फूल्स थ्योरी चल रही है. I am investing thinking that somebody else will buy from me. He is a bigger fool than I am. मेरे को तो
Right.
exit मिल जाएगा. I'll give you an example. At Everstone, we are invested in a company called PharmEasy.
Okay.
Okay. About 6 months back, we wanted to raise money because we were growing and stuff like that. So we raised money at roughly $2 billion valuation. Recently, you must have read PharmEasy acquired Thyrocare.
Yeah. Yeah.
So we needed to raise some more money. In 6 months, people valued PharmEasy at $4 billion.
Okay.
Now, two different pictures, right? Rohit wearing the hat of an outsider, Prashant wearing the hat of an insider. I will convince you today my PharmEasy is probably worth $20 billion. Why? Because I am an investor. I have skin in the game.
Right.
Whereas you have nothing. So you will
Yeah.
start asking questions objectively. And which is what makes investing a very interesting animal. It is only over a
Right.
period of time do you know whether you are right or wrong. Now, if you look at in this environment, when technology stocks are creating disproportionate wealth, both in the listed side and in the unlisted side,
Yeah.
look at the behavior of somebody like a Warren Buffett. Look at the behavior of somebody like a Rajesh Jhunjhunwala. They are saying two things. They are saying, I will not invest in things that I don't know. But look at their humility. They are also saying that we are wrong. We should have learned how to invest.
Yeah.
So last year or a few years back, Warren Buffett added Apple to its portfolio. But Apple was not added as a tech stock because it was making so much of cash flow, it fit into his traditional philosophy. So as I said, there are no rights and wrong in the markets. It is your right and your wrong. And this is where
Right.
people forget. It's like me comparing my physique to Hardik Pandya. Okay, I can easily compare. But I have to ask myself, do I work out 8 hours a day as he works out? Our inputs are different, so our output will be different. I can look at two different outputs and complain. So yeah, you are right. And Rakesh Bhaiya used to tell us when we used to ask similar questions to him back then, not on technology investing. So he used to joke and say, Prashant, the beauty in a woman and the value in a stock always lies in the eyes of the beholder.
That's amazing. Sir, the so many interesting points that are being brought up. I'm learning so much, and with the number of viewers that are there, also this has been the highest concurrent viewers that we've had, and that's all because of the sort of explanation that you're able to give, which is really amazing, and I really want to thank you for that. But
Thank you.
now coming to this, taking this forward itself. You say that we don't know yet who is going to be right, who is going to be wrong. People have their own views, right? But then, like the statement goes, history repeats itself, right? Now, if we look at the dot-com bubble, right, between 1995 to 2000, that's when same thing was happening, where investors were valuing the internet-based or web-based companies very, very high, and the valuation started going up, and after a point, it all broke and the bubble burst, right? Do you think that's the same aspect for these startups as well?
No. Because unlike in those times, there was no significance to the businesses that they were building. Okay.
Right.
Today, when I look at a Zomato, and you have to ask yourself, has Zomato made an impact in your life? It has, right?
Yeah. Yeah, of course.
Today, when I go and ask myself, has PharmEasy made an impact in my life? My answer is yes. Has
Hmm.
Amazon made an impact in your life?
Yes.
Correct. So where businesses have actually been created,
Hmm.
uh, the valuations may move up and down, but there is a reason for the businesses to remain because they're 40% market share in a 1.3
Hmm.
billion people market where eating out has just started or eating at home through delivery has just started.
Hmm.
20 to 2300 crore of revenues. It's not a bubble. The
Right.
business exists. The way people
Hmm.
value that business could be wrong.
Hmm. Hmm.
But
Hmm.
it is not that Zomato will go from 100 to bust. No.
Hmm. Hmm. Hmm.
Even if it corrects, the most conservative valuer on planet Earth is a person on whose book is my camera. Is this gentleman
Right.
called Aswath Damodaran.
Okay.
Aswath Damodaran is a professor of valuation and corporate finance at Stern School of Business. He is
Okay.
rated as the world's foremost expert in valuations.
Hmm. Hmm. Hmm.
Okay?
Hmm.
Aswath
Hmm.
Damodaran, with his best conservatism, still valued Zomato at $40.
Okay.
Sorry, 40 rupees, sorry.
Uh-huh. Uh.
So I'm saying there is value. Will this
Hmm. Hmm. Hmm.
140 come down to 40? I don't know.
Hmm.
But
Hmm.
to
Hmm.
answer your question, is this a bubble? No.
Right.
Also, you have to
Right.
understand the laws have become far more stringent for bubbles to happen.
Hmm. Hmm.
Second, investors who have burned their fingers investing previously have become far more evolved.
Hmm. Hmm.
Will a bubble happen? Of course, it will happen. Market always moves in cycles.
Right.
But do I currently see a bubble taking place? My answer to that is no. When I look at
Right. Right.
especially tech businesses, internet businesses.
Right, right, right. Completely makes sense, sir. Now moving away from this topic completely and coming into something more modern, which I think a lot of people would again be interested to hear your views on, which are cryptocurrencies. Cryptocurrencies have just been going crazy over the last year, especially like you said during the pandemic. People have started learning more and more about the financial sector, and cryptocurrencies have become the thing, right? And I think one of the few like maybe a minor aspect of it is because it's something which is decentralized, right, which is giving the young generation the thing that okay, this is not being controlled by anyone, and this will give me the freedom, right? So what are your thoughts on crypto? We just saw the fall of a major drop in the cryptocurrency prices, but then again, like the experts that do learn about cryptocurrencies are saying that it's just a cycle and it will carry on. But what are your thoughts on cryptocurrencies? Do you see
So
a future? I mean,
it's here to stay. Okay.
hmm.
Structurally, the technology is very interesting, very strong. Blockchain, NFTs are here to stay. I don't
Hmm.
call them as currency.
Hmm.
The reason is for me, currency has two definitions. I should be able to go and buy a cup of coffee with currency.
Hmm.
Can I do that with crypto? Answer to that is no, yet. So
Yes.
it's still not a currency because it's not in use en masse. Okay?
Hmm. Hmm. Hmm.
And it will
Hmm.
never be in use en masse till there are regulations and it gets somewhere in the visions of government.
Hmm.
Okay.
Hmm. Hmm.
Second, for any currency, I need a basic reserve on which I can issue currency. So
Hmm.
if you go back to the history of money, if India had to print rupees, the world allowed India only to print rupees if India had a certain amount of gold.
Hmm.
Because when the government is printing money, it owes money to somebody.
Right.
So if I were to ask you, lend me 100 rupees, first
Hmm.
question you will ask, Prashant, what is your net worth? Why will I lend you 100 if you are worth 1 rupee?
Hmm.
That
Yeah.
aspect is missing in crypto. Third
Hmm.
piece, which is dangerous about crypto, is it is subject to manipulation.
Yeah.
Okay. But it happens in anything that is new.
Hmm. Hmm.
My sense is crypto is here to stay. Which NFT will create value, not valuation, only time will
Hmm.
tell. You will see a lot of challenges coming from government for crypto. So the asset class called crypto will have a lot of volatility. Okay? Somebody like me who always looks at risk reward before investing, crypto is something I will stay out of it. I have a left out feeling. I missed out on the bull run. Now the markets are correcting. But my sense is here when something corrects by 50%,
Yeah.
then it is fundamentally very bad or it is very speculative. I don't think it is bad, but it's very speculative. You know how much leverage is behind crypto? I was last week reading a report by JP Morgan. Today, it's 120 times leverage behind crypto.
Wow.
Which means if you have 100 rupees, that's your worth. You have bought crypto worth 10,000 rupees.
Wow. Okay.
Okay, even crypto were to fall by 5%. How much will you lose? 500 rupees? That's 5 times your net worth.
Yeah.
So what will you do? You will take your hands off and you say, मेरे पास तो पैसा नहीं है. This leads to somebody else saying, boss, ये तो बेवकूफ बना, मैं भी बेचता हूँ. That's when the panic sets in. So yeah, it's not for the light-hearted, but it has a lot of excitement, right? Which is when the youngsters get into this. So I tell people you want to allocate 2-3-5% of your wealth to this for the fun of gambling, trading, excitement. Yes, do it. But to create wealth through crypto, only time will tell.
Right. One thing I think is that India has not really figured out its way with crypto as of now. The RBI is working on the digital rupees as well, using blockchain itself. But if we look at the Western countries, like US has adopted crypto in a major way. You can buy things with crypto, and there are a lot of these crypto billionaires or millionaires that have been created throughout this period as well, which is in the Western side itself. But then, like you said, there is a potential of huge manipulation in the market, which we again saw with Elon Musk itself, right? He was just able to manipulate the whole crypto market. The whole idea of cryptocurrency is of it being decentralized, not being controlled by anyone. But then to get rid of that manipulation, there would have to be some sort of control that would have to come in, right? Now, if that comes in, then the whole
rules. You need certain rules so that there is more participation. I don't know if you are a student of economics, but any price is a function of demand and supply. Correct? Supply remaining constant, demand goes up, price goes up, which is what is happening in crypto. Because supply is constant. When supply, economics says when supply is constant, demand goes up, price goes up. When price goes up, more supply comes. Brings the price down. There is always reversal to the mean. The current problem from a manipulation standpoint is there is no extra supply coming. Which means by manipulating the demand, the price goes up. Something similar also happens in stock markets. Where if you have something called as small caps or micro caps or illiquid stocks, in an illiquid stock, the price behavior is like crypto. Little buying comes in, the price will go. Little selling comes, the price goes down. My sense is, as government gets serious about blockchain, as they get serious about digital currency, about crypto, rules are from, you will have more participation coming. When more participation comes, more liquidity comes.
Right.
And that's the best thing to have happened to crypto, if this happens. What will happen in that case is, from a volatile asset class, it will become a less volatile asset class. Which is good news for everyone. People, you may not end up making 100% money in 6 months' time. But yeah, if you can make 100% money in 6 months' time, its definition itself is speculative, right? So I'm hoping for a lot of good things to happen to crypto. But am I an investor in crypto today? My answer is no.
Right. Completely makes sense, sir. Moving on from that itself, moving on from the conversation of cryptocurrency, I want to come to the last aspect of it, which is the how the financial coaching or financial education in on social media has been so crowded, right? Um, sorry, are you there?
I could hear you.
Yeah, back. Okay, my bad. So the financial education part of it on social media has been massive, especially because of the pandemic. Everyone has gotten into it, right? But then when we see like from a macro level, there is so much information with regards to finance, with regards to investing. Everyone wants to learn how to make money, like right. Even in the even in the chat box, if you see some of the comments, they're asking questions with regards to how do we start investing and things like that. But then now that you, as an experienced veteran of the market itself, who is coming in to educate the youngsters like us, what would you like to say to the audience that is here in terms of getting the financial education from anyone and everyone on the internet itself? Because so many financial so-called gurus have formed over the last year, that it's just overload of information and you don't know what is correct and what is wrong. People are giving speculative answers. Oh, you put in this much money, now you will make 1 crore in say in the next 20 years, 30 years, things like that. What would you like to say to those people who are taking such information?
Sir, one thing I'm happy about the fact that so many people are trying to influence different people. At least the education
Hmm.
process has started. Whenever you start something, there
Hmm.
will always be good, there will always be not so good, and both exist in any sphere. So I would say still that people are putting so much of effort to educate is one good for the country per se, because we live in a country
Hmm.
where 40 lakh crores, 40
Hmm.
lakh crores is the money that is in savings deposits,
Right.
and that is making its investors poor. I have
Hmm.
so
Hmm.
many posts that I tell that saving account is not saving account, it's a spending account. But I'll tell you what my approach is. My life experience has taught me that making money has more to do with your mindset than about making money.
Hmm.
Okay? Creating wealth has lot to do with your behavior than
Hmm.
about the formulas or get rich quick models. No. My
Hmm.
life has taught me that creating wealth is like running a marathon. It is
Hmm.
not a 100-meter race.
Hmm. Hmm.
You cannot create wealth without taking risk.
Hmm.
It is a given. If
Hmm.
you will keep your money in savings deposit and fixed deposit, you will never make money.
Hmm.
But the problem when I interact, and not just on social media, even with my friends, colleagues, everybody wants to take the risk of FD, but they want return of stock markets. वो नहीं होता है यार.
Hmm.
There are no free lunches.
Hmm.
Only those people who create wealth who take risk.
Hmm.
If you look at everything that I am trying to do, is that is my I am saying that is my purpose in life is to change mindset of people like yours. So I
Hmm.
always
Hmm.
tell people that investing is not a part-time job.
Right.
It's a full-time profession.
Hmm.
I started my career in 1992.
Hmm.
First thing I did is for 8 years, I studied in terms of I did equity research. I understood
Oh.
businesses. I went to
Hmm.
factories. I tried to forecast the balance sheet and P&L of so many businesses. Made so many mistakes. Lost so much
Hmm.
of money. उसके बाद जाके थोड़ी अक्कल आई कैसे इन्वेस्ट करते हैं. Right?
Hmm.
Now you have to decide. Let's say, Rohit, I don't know what you do. Tell me what
Hmm.
you do.
Like this is my job. My content creation is my
So
job.
you are content creator, right? If you are
Hmm.
content creator, you are earning certain income out of creating content, right?
Hmm.
So your full-time job is content creation. It is not investing.
Right.
then you don't invest directly in equities. So what would I do if I was Rohit? Or what is the mindset change that I would want to influence on Rohit? You can still create truckloads of wealth by being a passive investor.
Right.
The day you decide I want to create wealth, I am willing to take risk. All you have to do is to put your money in index fund where you don't even have to look at that. And ride it for 10, 15 years. You see the wealth you create. But the problem is everybody wants the excitement of stock markets, right? When I in the evening go out with my friends, I want to talk, मैंने ये share लिया. अरे भाई क्यों लिया ये तो बता.
Yeah.
वो नहीं पता मेरे को. Yesterday I was hearing another influencer. He was sharing his research method. He said, I look around in my house, I see what is interesting, and then I buy that company का share. So he said, मैंने पेपर में पढ़ा. One particular company के डीमैट अकाउंट बढ़ गए तो मैंने उसका शेयर ले लिया 3 महीने में डबल हो गए पैसे. So I tell you a challenge. It is good. He's made money. But if this is the way I will invest, it's only a matter of time when the reverse will happen. Because Rakesh Bhaiya taught us, it is not what you buy, but at what price you buy that matters. So my whole job and purpose to come to social media is to change people's mindset around wealth creation. I did one more live with, I think, somebody else, where I told them, making money is very simple, but it is not easy.
Yeah.
Right? आज क्रिकेट मैच चल रहा है ना, T20 इंडिया श्रीलंका.
हाँ.
Right? It is very easy when you get a full toss to hit a 6. But it's not simple.
Right.
There is a risk.
Right.
एक edge लगा out हो गया तो pavilion, right? You have to be disciplined. You have to play according to situations. It's the same in investing. The problem is, and it comes with youth. I have also done that. I told you I went twice bankrupt trading. So I tell people experience. But I tell them once you get the experience, when you realize making money इतना easy नहीं है कि लिया और 3 महीने में stock double हो गया, come back to reality. Don't give up on your dreams to become wealthy. That's another thing that I tell. Yeah, it is never too late to start. The best time to start was yesterday. The next best time is today. It doesn't matter what your starting point is. And I did one more live where I told people, you guys have no idea how much money you guys are going to make over the next 10, 20 years. But it comes with 2 caveats. You will need to be disciplined and you will need to be patient. After market goes up, it takes a lot of time to consolidate.
Right.
उसके बाद वापस बढ़ती है.
Okay.
The consolidation phase, because you've come through such an excitement phase, people can't handle the consolidation phase. Because it's boring. And that's the mistake you try to time the market.
Right.
My job is to change people's mindset. Mine is a complete not-for-profit. I don't monetize nothing. My whole idea is to just share my experience with people like you. In a hope some of you will listen. I know most of you won't. And it's fair. And it's only fair.
So that's an amazing way of looking at it, and you really changed my mindset itself right now with this explanation. And of course, for the audience that is watching, I'm sure if you haven't already followed him, please go ahead and follow him. There's a lot more that you can learn from him than people that are just starting off, right? Because I'm just really tired of seeing so many people who don't have a lot of experience sharing their expertise and trying to influence people into trying to make money in different ways.
So especially one of them, I have a quote, and it's a very interesting quote. I don't remember which book I read in, and it said, "Don't take advice from people you won't take criticism from."
Right.
So advice तो सब देंगे. अगर आप लेते हो तो it is your decision. Tomorrow if you lose money,
Hmm.
Don't blame that poor financial influencer. He did not put a gun to your head, right? And that is a
Yeah.
problem.
Hmm.
When we lose money, we blame the markets. When we lose money, we blame the friend. When we will lose
Hmm.
money, we will blame the influencer. We will never
Hmm.
blame our greed.
That's again so amazing to hear all that, sir. Thank you so much for doing this. I think with this, I would like to close this. I could like take this on for hours and hours, but then there is just so much that I learned from you. But I would love to have you another time for another life or a different
Of course,
topic.
yeah, of course.
Uh,
The relationship has just
so
started. I wish all your people who are viewing this, wish all of them well. I hope they all create truckloads of wealth. And yes, be an optimist if you believe in India.
thank you so much, Prashant sir, and thank you so much again for the audience that is watching. Make sure to please follow him, not just for financial advice, but just for mindset advice, which is really really important, especially right now for all of us as youngsters. I learned a lot today. I hope you guys learned it too. So thank you so much, sir, and hopefully we'll see you again sometime soon.